Okay, the market just closed. We were watching the E-mini S&P 500 this session. Early in the session, around in this area here, we stated that given that we had exceeded our opening range forecast, and just to recap, we forecasted an 18.3 opening range. We put in a 47 and 3/4 point opening range. This was primarily because we got a lot of economic data. We had NFP, unemployment rate increased to 4.6%. So we took that into consideration, and we can see the spikes in volatility and liquidity just when the actual volatility or the actual liquidity exceed our forecast. We know at that point something significant is happening. So at this point here, we saw the E-mini S&P come off the opening range lows, and we stated that given how we were trading, given the order flow we were seeing, given that we had a daily range forecast, I believe, of 78 points, we didn't believe that we were going to, one, reach that daily range forecast, and we believed that the market was more likely to just balance inside of this opening range. And that's really exactly what happened. So then after we bounced in this area, so in our initial outlook, we bounced to right in this area, and we saw just some balancing inside of this opening range. We did test outside of the opening range for a moment, just consolidated here, and then you can see you had some spikes in volatility, a big spike here in liquidity. So this is just where liquidity, the volume came in significantly greater than what you would expect given our forecast. And again, our models read in order flow in real time. So based on how we were trading, we wouldn't have expected to see this degree of volume come in. We see these buying tails, and then we auction back into this opening range. So then that's, if we zoom out here, that's essentially what happened the entire session. We just continued to trade inside of this opening range, pretty much as we had hypothesized coming into the session. This is why these the research lab, the opening range forecast, the daily range forecast, this is why these models are so useful, because if you formed this hypothesis with us earlier in the session, you could have literally just auctioned anytime that we broke beneath this opening range low. You could have been looking for loans back in this direction. As we got closer to this opening range high, you could have been looking for shorts or just trading this range.